Rents are rising, vacancy is under 4%, and 4 neighborhoods are outperforming every other part of Lancaster County. Let's break it all down. Give me that intro. Hello everyone, welcome back to Homes in PA. I'm Anthony Tejada, and today we're diving into the rental and investment real estate market for Lancaster County, Pennsylvania, looking ahead into 2026. Whether you're a landlord, a buy and hold investor, or just curious about the rental trends in this region, you're going to want to stick around. We'll cover rental rates, vacancy dynamics, attractive neighborhoods, and anticipated return on investment scenarios. First, let's zoom out and understand the broader context of Lancaster County. The housing market in the region has remained resilient. For example, in 2025, the median listing home price in Lancaster County was about $385, up about 4% year over year. Inventory remains tight in many pockets, and days on market are relatively low. On the rental side, the county has historically had low vacancy for affordable units. A recent report noted a countywide rental vacancy rate of about 3.4%. All this means for investors is that the fundamentals are favorable. And those fundamentals, of course, are 1, steady demand, 2, limited supply, and 3, decent upside potential. That said, no market is without nuance. So let's dig into the rental specifics. Based on recent data for Lancaster County, according to Rental Source, in October of 2025, the average monthly rent was about $1,536 across unit types. Now breaking that down, an average 1-bedroom would be about $1,199. A 2-bedroom would be about $1,621, and a 3-bedroom would be about $1,811. Another source for the city of Lancaster indicates average rent for all units around $1,728 per month as of October of 2025, with studio apartments being $1,089, 1-bedrooms being $1,502, 2-bedrooms being $1,759, and 3-bedrooms being $2,047 a month. So what does this mean for 2026? Based on stabilized demand, modest appreciation in home values, and limited new rental supply, you can reasonably project low single-digit rent growth for high-quality units. For some undercapitalized properties, you may see slightly higher growth if you upgrade and optimize those properties. Here's an example for a 2-bed property. If current achievable rent is $1,620 per month, that would equate to $19,440 per year. With modest rent growth of, say, 3% in 2026, that's an increase of $1,670 per month, with a yearly total of $20,040 per year. As always, investors should model conservative growth, but also factor in turnover maintenance and rental concession periods. Vacancy rates are a key component of any rental investment. As mentioned earlier, the county rental vacancy is quite low, 3.4%. So what does vintage data show? Well, one source shows average days on market for rentals in the county at about 32 days for well-priced units as of late 2025. So in practical terms, for properly managed, well-located units, you can expect minimal downtime versus for older or poorly located units, you are likely to face longer vacancy and possible rent concessions. Keep in mind that near campus or near downtown or recently renovated units will and should outperform lesser properties. Even though inventory of homes is slowly increasing, when it comes to the newer rental unit development aspect of the market at this time, it remains somewhat constrained, meaning there are fewer new larger scale rental buildings compared to some hot metro markets around the country. But this constraint supports fairly stable occupancy for a good rental product. When we zoom into neighborhoods within Lancaster County, some clear patterns emerge. The data suggests the following submarkets are especially interesting for investors. For instance, Lidditz, known for its charming downtown, strong school system, and high demand, homes here command a premium. Mannheim Township, with its proximity to Lancaster City, good amenities, and its appeal for families and commuters. Ephrata is more value-oriented. Growing rental demand and decent entry point for investors make this town one to watch for sure. And of course, Lancaster City. For investors focusing on smaller rental units with possibly less maintenance and turnover, like 1 or 2 bedroom apartments, student housing, and rentals with walkable lifestyle, make this an attractive option. Now, an important caveat that any sub-market needs to be judged by relies on important micro factors such as condition of property, parking amenities, good management, local zoning or licensing for rentals, and tenant profile. Now, understanding the tenant profile in Lancaster County is crucial for real estate investors aiming to maximize occupancy rates, rental income, and long-term stability. The county's demographic and economic diversity creates a varied tenant base, influenced by factors such as neighborhood characteristics, proximity to amenities, and property types. Young professionals who like predominantly the Lancaster City area and are attracted by walkability, cultural amenities, and proximity to workplace often prefer modern apartments or lofts with updated features. Of course, families who commonly live in suburban areas like Mannheim Township and Lidditz are drawn to strong school districts, parks, family-friendly neighborhoods where they typically seek single-family homes or larger townhomes. And then students who concentrate on areas near Franklin and Marshall College and other educational institutions where demand is high for affordable, low-maintenance units and often shared accommodations. Now, there's also the retirees and empty nesters, who are typically found in quieter neighborhoods like Ephrata, preferring low-maintenance properties, single-story homes, or condos with community amenities. We also got to pay attention to tenant priorities. Knowing a tenant's priorities is key. Some of those are affordability. Renters prioritize cost-effective housing, particularly in Ephrata and other emerging neighborhoods. Convenience. Proximity to public transportation, shopping centers, and work hubs is a key factor, especially for young professionals. A significant consideration is made for families and retirees with preferences for well-maintained properties in secure neighborhoods. Now, certain trends to keep an eye out for are high demand for 1-2 bedroom units among singles and couples, consistent need for 3 to 4 bedroom homes in suburban areas catering to families, low vacancy rates across the county with faster turnover in urban centers compared to suburban areas. Investors should tailor property offerings and marketing strategies to align with these tenant profiles and occupancy trends, optimizing for both tenant satisfaction and return on investment. Now, for the meat of the matter, ROI, let's walk through a hypothetical investor scenario for 2026. Say we purchase a single-family rental in Mannheim Township for, say, $300,000. Assume you have a down payment, financing, after-debt services, taxes, insurance, maintenance, etc. You net $300 per month cash flow. That is $3,600 per year net. Now assume rent is $1,700 per month. That's around $20,400 per year. And after expenses at 40%, expense ratio leaves you a netting of $12,240 per year. On a $300,000 property, that gives about 4.1 net cash return. Now, if that property appreciates at a modest 2%, that could be $6,000 value gain, and you have a total return of 8.1%. If you leverage, say, 20% down, your equity return could be much higher. Now, given the data we just discussed, with rent growth being 2 to 4%, with low vacancy and demand being stable, you can underwrite for even slightly higher net returns if you buy well below market, proceed to add value through upgrades, and manage aggressively. Some sources noted past yields in Lancaster reaching 8 to 12% for well-selected assets in certain neighborhoods. Important tip: Always account for risk buffers such as cap rate, compression, interest rate increases for adjustable debt or replacement finance, upcoming big maintenances such as roofs and systems, and the regulatory tenant risk. But overall, if you find the right asset in the right submarket, Lancaster County in 2026 shows solid potential for rental, long-term, and buy and hold investors. All right, guys, so let's summarize with key takeaways and actionable steps. Now, here are your takeaways. Rental demand in Lancaster County remains strong. Vacancy is low, rent growth moderate but stable. Average rents for 2 bedrooms in the county can yield in the range of $1,600 to $1,800 per month. Some submarkets, such as Lidditz, Manheim Township, and Ephrata, offer value and upside. Achievable net cash and total returns in the 5 to 8% range are realistic for well-executed deals. Focus on condition, location, management efficiency, and tenant profile. Actions for investors should be to focus on those with good fundamentals, schools, amenities, commuting access. Use conservative rent growth such as 2 to 4% with an assumed 8 to 10% vacancy and turnover costs, and factor in capital expenditure. Look for underperformed properties you can renovate and or upgrade to achieve premium rent. The demographic for the area you're looking to invest in, asking for student rentals, or are more young professionals and families are looking in that area. Each segment has different risk and reward factors. Ensure you understand where you'll be in 5 to 10 years, keeping in mind budgets for appreciation, refinance, and or sale, and how that may look for you in the timeline. Use a good property manager familiar with Lancaster laws, licensing, and tenant market to avoid unexpected expenses. All right, guys, thanks for watching this 2026 rental and investment market update for Lancaster County. If you found this helpful, please like the video and subscribe for more local real estate insights. Also, hit that bell so you don't miss future updates. Drop me a comment below. Are you investing in Lancaster County or watching another Pennsylvania market? Let me know your thoughts, guys. And as always, I'll see you on the next video.